introduction on SCORE, please, if you need to go to SCORE, score.org, and we can put you in contact with whatever expertise you need in order to help your business. Okay, so what I want to deal with today, does anybody of you need, oh, everybody has. What I want to go through today is the basics of accounting, steps to classify your transactions, compiling your profit and loss statement from that, compiling your balance sheet, and I'm just touching on a few accounting software that you might consider for your business. Okay. So these are the things that the accountant doesn't tell you. You know, all those secret details of how accounting works. You know, my one previous boss always said, there's two things. He was German. I worked for a German organization, and they always said there's two things you never look at. How a German makes sausage, and how an accountant does the books. And that's absolutely true. But one of the most important rules for accountants, bookkeepers, is the double entry. For every debit, there's going to be a credit. That's why I love finance. That's why I love bookkeeping, because it balances always. For every debit, there's always going to be a credit. The second very important principle is matching. The matching principle. What the matching principle means is that your cost should always be matched with your revenue. Okay, in the same period, if your cost is related to a certain revenue item, to that revenue item. And then completeness, recording all of your transactions, making sure that all your transactions are in the books. You know, look at your sales, take your bank statements, your invoices, your sales receipts, make sure you have all of those. From a purchase perspective, all your receipts, your purchase orders, obviously you have your payroll for your employee compensation, and then obviously taxes. So if you have those three, you know, the double entry, understanding that revenue and cost should go together always, and that you need to make sure that you have all transactions, then you're going to be fine. A lot of people feel that when it comes to recording all the transactions, there is no right or wrong way. The most important thing is for you, however you want to list it, go list your transactions on an Excel, on a Word, whatever the case may be, go list all your transactions. And that's where you basically start. Okay, so first step is obviously you have all your transactions, and then you need to determine your categories. So your categories, that is very applicable for your profit and loss statement and your balance sheet. And the categories is really straightforward. You have your revenue items. So Amber, for instance, will have consultation or stretching. I saw somebody did home. Thank you very much for this, whoever this was. You know, her revenue would be coming and design or redesign somebody's place. So determine your revenue categories and the cost related to those revenues. So the cost of goods sold, that is what we mean. What the cost of goods sold means the cost related to that revenue. Whether it's contractors, whether it's material or inventory that you use in order to deliver the revenue that you have. And then you have obviously all of that other cost. Now the other cost is stuff that is not related to that specific revenue. Rent, utilities, marketing, all of those type of things, okay? And then you have your assets and your liabilities. In some cases, assets might only be intellectual capital, but look at stuff like your vehicles, property, equipment, all of those things. And then liabilities is the money that you owe. Do you have accounts payable that you need to pay? Do you have any loans that you need to pay? All of those. Once you've determined your categories, you obviously will get a list of all of your transactions. And then the most important thing is, by remembering the double entry, allocate your transactions to all of the categories. But always have a plus and a minus in all of your categories. Okay? And I'm going to show you how we do that. Oof, that's very small, right? Let me see if I can get that. Can you open an Excel?
Yeah, we give a
Can
sheet.
you guys read that, or is that?
So I could do Google Sheets.
Oh, if you can Excel. Yeah, or Google Sheet is fine.
I don't need Google
Yeah.
Sheets.
Is that better?
Yeah.
Yeah.
Okay. There you go. Okay, so Remember I said you have the different categories. Your revenue category, for this example, I have revenue consultation, revenue design. One of my clients is an interior designer, so that makes it easy for me. Cost of goods, material contractor, there's your other costs, salaries, rent, marketing, telephone, vehicle, your assets, building, cash bank, and liabilities, loans payable. Now see, do you guys see the minuses and pluses at the top? That was my first year accounting. Professor taught us that, and I never forgot that. So the revenue, if it's a minus, it's a positive. That's why it's in green. The cost, when it's a positive, it's a negative actually. The assets, when it's a positive, it's green, it's positive. And the liabilities, when it's negative, it's negative. Difficult to understand, but once you get that concept, go repeat it for you 2 or 3 or 4 times, you will get it. Revenue, when it's negative, it's positive for your business. Cost, when it's positive, it's negative for your business. Assets, when it's positive for your business. Liabilities, when it's negative, it's negative. These two are easy to understand. That one is the most complex. Okay, but once you understand that principle, and just go repeat it for yourself, or even go put it in there for you. And as you go through the examples, you will see what I mean. So let's say, for instance, this client had a consultation amount of $5,500. Okay, so the revenue is a minus, but it's positive for the business. That's why we showed it in minus, the $5,500. But remember, this client you always have to follow the double entry system. So on this side, if you get revenue, your bank is going to be positive, about 5,500. So see, those two lines cancel each other and they balance. So your revenue increased with that transaction, but so did your bank increase with that transaction. Okay? Next one is a design, 20,000. Client decided they're going to pay 5,000 and 15,000 is on accounts receivable. So your revenue is 20,000. That's what you're going to book in your books. Your cash is 5,000 because the client paid 5,000 and your receivables are 15,000. There's your 20,000 now evened out. Something like material supplies, fancy pants. Material supplies, they provide supplies to you 6,000. The cost of the goods, 6,000. And your bank, and you get payables, 6,000. Understand? I see a lot of question marks in the faces. Does it make sense?
Yeah.
Okay. Let's take, for instance, a supplier that you install 3,000 there. It's your contractor. You can put it in your contractor cost. Your cash is negative by 3,000, so it balances out. So I'm not going to go through all of that, but this is a great example for you to work from to do your own transactions. And once you do 2 or 3 or 4 transactions, you will start to get it. Just yes.
May I ask a question yet? Or
Yeah.
do you wait till the
Oh,
end?
you can ask.
Okay, because it might be relevant.
It's very interactive.
Yay. So this is, I'm moving away from using a bookkeeper to doing my own books again, now that I moved my business out here to Arizona. I have cost of goods sold, but I also have inventory, raw materials. So when I, manufacture something, I pull from this batch, and so it's like this, it sucks. Let's be honest with you. Well, it's a pain in the butt, because it's like you constantly have to keep your finger on the pulse of your inventory.
Yeah.
You want to have an accurate understanding of what you're truly earning, right?
Yeah.
I used to do my inventory like twice a year, and it just, no, I
Yeah.
can't. So, my question is, how would you?
So remember, when you buy your inventory, okay, your inventory is going somewhere. It doesn't go into revenue or anything like that. It's purely inventory. So in that case, you're going to debit. You're going to credit your bank because you paid something, and you're going to debit inventory because inventory should be an asset for you. They will both be a balance sheet item. So it wouldn't go over to your profit and loss statement yet. Once you use that inventory, what you do then is you credit your inventory and you debit your cost of goods sold, the amount that is applicable.
Okay.
Make sense?
How many people use QuickBooks?
A lot, yeah.
How many people actually look at their profit and loss and balance sheet every month?
Is the important.
How many people still don't fully get QuickBooks?
Well, the point is, on one side, I like, because I ran several businesses, and that profit and loss statement is like a report card every month. It says, where's the money going, okay, my costs, also too, my cost of goods going up, and I've coached people that have, they don't understand, they're generating $1 million worth of inventory and they're losing money. Well, you didn't compensate for your cost of goods because the cost of spices went up and you didn't do it.
Yeah.
Or your operating costs are going up. You know, it used to be telephone costs were out of this world, or somebody raised your rent. So you have to use it. The importance of this is that you have to use it as a tool to run your business. You have to know your numbers.
Numbers don't lie.
Yeah.
Well,
Numbers don't lie, people do.
but also too with accountants, figures lie and liars figure. So you really have to. If you're going to run a business successfully over the long term, what Bertus is showing you is terrific. But look at it once a month, and if you don't understand it, you talk to people like Bertus, or get a SCORE mentor to help you with finances. He's the best guy I got in the chapter as far as really breaking it down. And things like cash flow is important. I mean, Bertus and I will mentoring call, and this guy, let's say he's running a restaurant. Let's say this time of year, all of a sudden his business goes like this, and then it goes down because it's the holiday and people are coming back from vacation. Okay, so if he's forecasting these changes, that affects who he's employing. Okay, that affects how much inventory he brings in as far as food. But he can trend that over years and say, okay, this is how I run my business successfully. Because otherwise, all of a sudden he runs out of money and he's got to borrow from a bank. Yeah? That, instead of borrowing from a bank, he's compensated or he's accrued enough money to handle it. So this is an incredibly important part of running a business, especially as you grow. So, I'm sorry.
No.
So I mean, just to bring that to attention, I mean, that might be a great future class. Is like how to actually read the damn thing.
Okay.
You know what it really says.
And what to do about it.
Yeah, in reaction.
Here you got 55. I used to run a manufacturing flavor. And here the accountant made me crazy because he had 55 numbers down there. I said, well, what's important? How to focus on what can I do and can I take actions on certain things? I can't take action on my rent necessarily. Okay, but what can I do to improve my business and watch it?
Sure.
The thing is, if you do this on a monthly basis, and you just keep your discipline in doing this on a monthly basis, or even a weekly basis, or just at the end of the day, this is going to help your business tremendously. I'm not going to go through all of these. Just to give you an example, if you buy a sports car, for instance, I think John will do that soon. You're going to debit your vehicle and you're going to credit your loan. Okay. So all of these have what I want to point out to you here, all of these have a plus and a minus, or a positive and a negative, and it's just basically putting them in the right category. So once you have that, you obviously have the totals for each of your categories at the bottom of that. Yeah.
I have a weird one. What about like stuff that like gets destroyed at work, or like I'm throwing massage tables in and out, or a piece of equipment that like somebody didn't return? It's an expense, but how do I actually where does that actually go?
So that would be because
It's
you're
like
on
a depreciated item or done. Is it a write-off broken?
It's
or
a
how do
write-off.
okay.
Yeah, you would do a write-off. So your cost will be a debit
So I
because you're
keep
going to.
track of all those and then give them to my person at the end of the year, like, or
Yeah,
I just
you
make
have
a
to.
list and then it's 100% of the cost that's like written off.
You have to keep a record of those. If you get rid of anything, you have to get rid of that because it's an expense for you.
So consequently, is that a tax savings for someone?
Yes.
Yeah,
So
I
do you-
was recording that.
Sorry,
for
sorry. Oh, Oh, sorry. No, do you have to have a receipt, or is that like something essential? Because I've had accountants who say, oh, we could just use a bank statement, or we can use
You
the
don't
receipt.
need, yeah, I mean, remember accounting, whatever goes in accounting, obviously you need to try and have supporting documentations behind it. But we have a thing in accounting that we call AGE, Adjusted Journal Entries. You can't have a record really for an adjusted journal entry. That's where you just would make provision for transactions like that, where you have losses, for instance, or anything like that. But if you guys any time have a question while you're doing it, drop me a quick email, and I will definitely reach out and try and answer your question for you. Okay, so the pluses and minuses you now have your total. So what happens?
Did it freeze up on you?
No, I just need to go to the next.
Oh, yeah, you should be able to, oh, is
Okay,
it
so
moving on
remember
you?
we have revenue.
We get a
here,
little tax
the
support.
5,500 to 20,000 to material.
Ledger, not, yeah.
Yeah.
There you go. So once you've done all of this is where the magic happens. All you need to now go do is go slot those amounts and the lines in the different areas. Profit and loss statement look like that. You have your revenue from your different services, your cost of goods sold, the cost related to generating that revenue. Remember, it was the material and the contractor. So in this case, this company made 25,500 revenue, cost of goods sold of 9,000. The gross profit is 16,500. So they make 65% gross profit, which is a great gross profit, and they can start managing it now on a monthly basis because they have this figure. This is the figure that they want. What is my gross profit? How effective am I in running my business? And then the other costs, salaries, rent, marketing, telephone, all of those type of things. More a fixed cost type of thing, but also very manageable. And that, at the end of the day, is going to give you your net profit of 36%. The correlation between these is very important. Understanding that your gross profit, that also a certain percentage of your cost that comes out of that gross profit should be market related, very important. Once you have these, and we will do that now for our next session, once you have these, to understand that, listen, for instance, my marketing, okay, I don't show marketing here, but let's say my marketing should be, as a normal business that is not a startup, should be 5 to 10% of my revenue. Now we can go measure, is that marketing 5-10% of my revenue? Personnel in the industry might be 20% of revenue. Now if you go check, in this case it's 5 over 25, so 20%. Okay, so these are the things that you are then going to start measure from your profit and loss statement. So do you guys see how from the previous sheet I got to this sheet? It's really just a carry over each and every transaction. The profit and loss items go in the P&L, and this is a figure that didn't come from that sheet, the pluses and minuses. This is the result of that. Why is that important? Because it goes into your balance sheet. Okay? So your profit and loss always goes back in your balance sheet, and that is the item that is going to balance everything for you. So your balance sheet is basically a summary of what are your assets and what are your liabilities and equity. These two always should balance. If they don't balance, there's something wrong. Okay? So your assets is basically, what do I have in the business and where did I get the money from, or where did I get it from?
Does anybody here want to borrow money? Okay.
From you?
Not from me.
Nope.
But these things are very important also too. You know, what does a banker look at first when you want to borrow money? Okay. The first thing is they want to know whether you're going to pay it back or how you're going to pay it back. But the second thing is they look particularly at cash flow and this balance sheet. People think they look at the profit and loss. And like as an example, I had a company that was making like a 70% gross profit. You think that's terrific. But they also had almost 2 years worth of inventory when I took it over. And so they had no cash flow. And the bank says, I'm not going to loan you money. You know, So it's interesting to understand the correlation with them and how you, in running your business. I mean, inventory is probably one of the biggest killers in businesses.
So I feel like I get people talking about small business when they just started out, really not understanding about which one, their gross profit or their net profit to pay themselves out of. So they think that when they look at their money, even though it's not in their account, that they're making a lot more money than they actually are making. And I think that it makes this discrepancy in small business where people are like, I'm just gonna work for myself, I'm just gonna hire someone. So when we look at these things and you're thinking about, okay, well my business is this healthy, and you're looking at those, where do you know a healthy versus an unhealthy business? And when you're looking at how much people are thinking about paying themselves and or actually paying themselves, where are you like, this is a huge discrepancy we see a lot of small businesses making that they don't even know that they're making.
Yeah, because a lot of the small businesses, as you rightfully say, oh, I buy all of these things for $100 and I sell it for $250. Wonderful, you're making 65% profit. But you have all your overheads. You have your salary, you have your car, you have all of those things that you need to consider in this equation. And all of these has a certain standard that it needs to be in, even if you pay yourself. What salary are you paying out of that?
So like what do you usually recommend to small businesses that are just starting out? Like you really shouldn't start paying yourself at this percent until you're at this level of income, or you should never exceed this much because you need this much in reserve. How do you recommend that, like if you could use maybe percentages?
I always recommend anybody to pay themselves. That's my first, because I yeah. I mean, if you are starting a business, obviously you're gonna have every situation is gonna be unique and individual. From a tax perspective, it's good to pay yourself. Okay, purely because you can deduct it from a business perspective. You can create that tax credit or that tax. Over, you know, if you make a tax loss, you can transfer it to the next year. So even if you pay yourself, just always make sure you pay yourself market related if it's your own business, because the tax man is going to look at that when you work out your individual taxes.
I know it depends on the sort of business that people are running, but can you give maybe some cliff notes on the advantages, the pros and cons of like a S corp to LLC to?
Okay. So your S corp gives you the opportunity to, from a tax perspective, to change how you withdraw your money out of the organization. So as a private individual, the S corp gives you that flexibility because you can take that money, you can either invest it for future, and that gives you that benefit. The LLC wouldn't give you that benefit because anything that comes from the business flows right into your private finances.
May I comment on some experience with that?
Yeah.
I have an S corp back in Minnesota, and one of your SCORE lawyers that I love dearly helped me with some transactional stuff. I'm struggling to get my S corp transferred because of a loan and different things that I have in Minnesota. Anyway, long story short. I essentially am starting a new company here in Arizona, and I have a loss in my corporation in Minnesota that I will not be able to take advantage of. Because it's stuck in the corporation, it doesn't flow through. So just a little on the other side of, I mean, it's a benefit if you're doing well, but during COVID, a lot of my revenue streams were shut down, and so that year I had a loss, and it's just stuck.
Correct me if I'm wrong, Burgess, but in general, small businesses should start out as LLCs, okay? When you get to a certain size and you have people and stuff, then I would suggest, thinking about an S corp. Lots of times accountants want to move you almost, and I had this error, my business, they put me as an S corp, and it was a pain in the butt.
Well, they make more money out of you.
What's that?
The accountants have an advantage,
Whatever it was,
Yeah.
and especially Arizona's environment is so friendly to business overall. You're a solopreneur or you're an LLC, and as you progress or something, and you have 3 or 4 employees, then you should think about, okay, I should be switching to the S corp.
Yeah. There are a lot of advantages and disadvantages of both. So if you want to, I can at some stage maybe sit with you and we can go through that.
Okay.
Or I can even bring it up here.
So I've had and heard and am also continuing to grow my small business, and I think that something in Arizona that a lot of people take advantage of is the independent contractor situation where, you know, this is a right to work state, it's very like open, like, hi, build your schedule, this is the work. When people are thinking about doing that and or we are doing it, at what point are you like, okay, my time is so valuable that I need to hire someone else versus I want more free time and I'm ready to hire someone else? Where do you find that in your business and the money? Where do you see that the most? And, you know, like, great, I'm making a profit off of someone else when they work. That's wonderful. But how do you know that you're actually ready for that instead of just forcing it because you would like some more free time?
I think your clients are going to tell you.
Mm.
If you are just overwhelmed in your book of business or the demand for your business is much more than what you can deal with and you can make money off a certain person, that's when you absolutely should do it. You know, the one thing that I tell so many people, you see so many restrictions for expanding. There's an expansion opportunity, take it. If the clients want your service, take it. You know, get a loan, get that additional business, especially if you're in the type of business where that demand is there. You know, some people would love to be in your shoes, to have that demand that is more than the supply I have.
Mm.
So if your demand is more than the supply, make sure you fill that supply.
And then I have one other question. So in my business in particular, I'm going to use this as an example. So I have a physical therapy company and I also do massage therapy.
Mm-hmm.
In my world, I don't advertise massage because it's a therapy-directed massage and I don't want it to go outside of the country because I'm technically a healthcare company and they're not the same in the way you can market, advertise, and even collect revenue. For example, tips. Medical providers cannot accept tips, gratuities, so even nurses. So even though I get Botox in my face, I'm technically not supposed to leave a tip from medicine says.
Mhm.
But if it's not a medical procedure, then somebody can. So the massage therapist can receive tips directly, but it cannot come through my business, is my understanding. I kind of wanted to create two separate businesses. Is that recommended, or is there an advantage for me keeping them the same just because it has been easier for me? Or, because my understanding is the whole point of an LLC is to limit that from this, they don't touch, and so there could be benefit to having them separated in the way I can market them as well. That would be an advantage to me.
I mean, whether the two companies are under one name and operate as one business, I don't really see a problem with it because they are complementary and you only have to manage one company.
I mean, that's been great.
Yeah. If I personally was in your situation, I would not have split it because it's just going to
I haven't yet. I just keep thinking, would this ever create a problem for me, and is it more of an advantage to run this as not a medical provider?
You know, I'm one of those people with things like that. Let's look at the advantages and disadvantages on both sides. Are you going to get any benefit out of, you know, splitting it off or not? And if the answer is very minimal, I wouldn't do it because it's just going to create additional admin work. I'm very much for automation, get things out as far as away from you. Don't work in your business, work on your business. That of thing. Any questions on the profit and loss balance sheet, the process, how it works? Sorry, I think I took a bit longer than 20 minutes.
No, it's fine.
No, you're good.
Yeah. So, last slide, accounting systems to consider. I'm not I come from the corporate world where SAP was the big thing. SAP I would not recommend for any small business, or for any business for that matter. SAP is an extremely complex business, but if we go into looking at it from a small business perspective, obviously QuickBooks is one of the ones that is the most well known. There's also FreshBooks. I like to use Xero. The only reason why I like to use Xero is because Xero is also an open platform. So you can integrate any other system into Xero, whereas with QuickBooks you have limitations with it. One product that I've heard a lot of good things about is Sage. I've never used it before, so I can't.
We used it. And also too, depending upon bigger businesses, at that time, you could tie it into Act or CRM, which, like Salesforce or something like that, which could be important because then if you have a lot of transactions or a lot of salespeople or something, you know, it's all coordinated into one, because the problem is if you have a separate accounting system and a separate CRM, you know, it's hard to integrate sometimes, so.
I must say with Xero, Xero you can actually get, a lot of people think that Xero systems are expensive. For my business, and I'm a private consulting business, basically, I use Xero. It costs me $13 a month. So Xero is very cheap. I mean, QuickBooks is also fairly cheap. If you don't have an accounting system or a bookkeeping system, you know, consider investing in a Xero or something like that for $13 a month and start utilizing it. Take the training, understand the double entry system, and take it from there. Any questions?
I just want to give a shout out to FreshBooks, because I use FreshBooks,
Okay.
and it's unbelievably simple. It's just super simple, you know? So I'm a big fan.
Anything that's easier than QuickBooks. I've
Oh,
been here
yeah.
10 years and I'm still confounded by QuickBooks.
Yeah.
I don't understand.
Facebook, Xero, and Sage, I would say, is easier than QuickBooks. Yeah.
Wow.
Yeah.
Yeah.
QuickBooks is complicated.
QuickBooks is
It
complicated.
confuses
Yeah.
them.
Thank you.
Yeah, right?
It is,
Like
yeah.
I'm saying,
Yeah. I mean, I'm sure it's super robust, right? But I mean, for me,
Yeah.
FreshBooks is like just intuitive. It's like
See, I think
it's
that's
just
what
easy.
QuickBooks is like, it's like too much for my business.
Yeah.
Like there's so much that I get into it and I go down this funnel and I'm like, ah! So then I just stop.
Yeah.
John, you said you like FreshBooks.
I love it. Yeah, it's really super easy and intuitive and
Okay.
cheap.
How much is it, do you know?
I think it's like $10-12 a month, something like that. Yeah, it's pretty cheap.
I actually don't like QuickBooks because you literally never see the amount that you're paying in for what. So like every month that you're doing something and you add a feature or whatever, it's
Yeah.
just going up some fee and you don't
Or
see
you
an
just
invoice,
add
they
up
just
on
do
you
a
all on their own, if
subscription.
you don't have.
Yeah, I'm like up to
choice.
$120 and I have no idea what I'm paying for, or
Yeah.
even how to eliminate those fees. I'm like, this started at $29.99 a month.
Yeah.
How did it increase and why? And you try to call in, there's no one to
Can't
talk
get
to.
them anywhere.
So I still use it, but now I have to pay someone else to like go in and do stuff for me still. So I agree, it sounds awesome to be able to check out another platform for that, and yeah, that's great. Thank you, Burgess.
So now you're paying somebody to do your QuickBooks in addition to the $100 more a month.
Yeah,
for
monthly.
QuickBooks.
Yeah, that's actually my
It's adding
question.
up. It's adding up.
That's actually my question is, so me personally, I love keeping track of my own finances. I don't know why, I just really like it. And I've always told, like, I'm in a family of entrepreneurs, they always say, oh, you have to have someone keep track of your stuff. And I'm like, well, at what point do you have to have someone you don't?
I think it's most people don't understand how to do it, so they
Yeah.
say, and they want somebody to check it, which if you have an accountant,
Well, I don't know, I'm not saying I know fully how to do it, I'm just saying I enjoy learning the process of it and learning how to do it, so I know what's going on.
So I was talking to one guy and I said, okay, he says, well, I do this and I spend a lot of time there. I said, well, does that take you away from selling because you're the chief sales guy? He said, yes. I said, so why don't you pay somebody? Okay, you have to establish, all right, you know, what are you gonna get the most bang for your buck? How much you're gonna get paid? I've seen some people, they avoid actually marketing and selling because they feel more comfortable in this account.
So when it's like taking away time from actually
So
running.
you have to, and I think that's the biggest difficulty with entrepreneurs in general is prioritizing their activities.
Yeah.
Okay? I guess I hit a nerve there, huh?
everyone in this room can relate to that comment.
And you tend to move towards what you like to do rather than what is of most
Right.
benefit sometimes. So
Yeah.
you have to be careful with that.
Yeah.
I mean,
You can get into numbers, Dave, like,
just from my own, for 30 years being an entrepreneur, being my own paycheck, right? What it's come down to 100% is revenue versus non-revenue generating activities.
yeah.
And if you can generate revenue
Yeah.
instead of doing non-revenue generating activities, that's when you let somebody else do it. But I mean, but to balance that, if you pay somebody to do a non-revenue generating activity, but you're not able to use that time to generate revenue, well then you waste money.
Yeah.
But if you have the ability to use that time that you're spending on your books to actually generate more revenue, then generate revenue. That's real
And
simple.
profit.
line. Yeah, and profit.
Because you don't take revenue to the bank.
Absolutely, yeah.
If it's going to take you half an hour to do that first line where I can do it for you in 2 minutes, come to me. That's how I feel. If I can do it faster, more effective for you, that's when I would do it. But also be careful, some bookkeepers are very, very expensive. There is something that I've been experiencing for the last 3-4 months that I want to warn you guys about. There's a lot of marketplace bookkeepers. Avoid them with all costs. The thing with marketplace bookkeepers is it's a marketplace, they add profit on profit on profit. It's very expensive. Those guys in a lot of cases are not vetted.
I don't know what that is. What does that mean?
So the marketplace bookkeeper is, they have this website, it looks like you're getting a bookkeeper, but all they do is linking you with a bookkeeper. So they're like a website, a marketplace. That links you with a bookkeeper, and then they make money on that bookkeeper.
Right.
So you are paying somebody for, let's say you keep that bookkeeper for 10 years. You are paying somebody for 10 years just to have found that bookkeeper for you, which is fine.
Right.
Yeah. So my recommendation, I always find it's also better to have a local person, purely because it makes easier from a communication perspective, interaction perspective. Don't go pay $100 an hour for a bookkeeper, please. You know, there are bookkeepers out there that can do it much better for you, much cheaper for you, and good quality bookkeepers. So look around. If you ever need a bookkeeper, also come and talk to me. And also, obviously, if you ever need score for anything in your business, please reach out to us.
So there's been a couple in Scottsdale Living, there's been some people that are leaving their corporate jobs and are looking for bookkeeping jobs. They're posted in Scottsdale Living, so.
Totally, yeah.
Awesome.
Thank you, Bruce.
Well, thank you.